Welcome to Neppy Invests the World. I'm going to eat some blueberries, some raspberries, strawberries, have some smashed over for dinner, although that's a bit weird since I'm not a millennial, and maybe I'll have some mushrooms and some tomatoes. And that's a bit of a homage to Costa Group, ASX code CGC. So their business is growing and producing all those wonderful fruits and vegetables. So they released their results on August the 28th, 2020, and they've been in a bit of a downtrend the last year and a half or so, and looks like things might be turning around for this wonderful Australian company. So is this a turnaround? We're going to have a quick look at their results and have a bit of a look at their charts, the historical charts, and hopefully this is a good turnaround story. It was a market darling for a while, and maybe it will become a market darling again. So this is just a bit of a historical chart from just after they listed in July 2015. So they listed their share prices around $2 on listing. It did fall to a low of about $1.60 just after listing. So, and then you can see that the chart went from $2 all the way up to a high of $8 at the start of 2018 or middle of 2018. Looks like there's a bit of a double top there. So it reached $8.38 in June 2018. And then reached that $8 again around August or so. So that's a four-bagger for anyone held it from the IPO, and hopefully they held firm. And then hopefully they sold out just after those highs, because if we go through to the next chart after this, you can see really good downtrend from that high of 838 all the way down to this year. So 2019 was not a really good year for Costa Group. They had three downgrades, one in January, another one in May, and then in October, another downgrade on top of a capital raising. Initial drop in price in August 2018. Price fell from $8.10 to $2.18. We did have a look at that report. They did have good growth that year. So either I think the market may have been expecting more growth, or the market was concerned about the future. And looks like at this point, rightly concerned, because the first downgrade happened 10th of January 2019. And that downgrade was because of subdued demand for tomatoes, berries, and avocados in December of 2018. And that subdued demand lasted into January. Second downgrade was in 30th of March or 30th of May. The price fell from $4.80 to $3.48. And they mentioned a deteriorating environment on a number of fronts. So there was many things. I think there was even some diseases on some of their fruits, decreasing demand. I think at that stage, if you remember correctly, the price of berries was really low, blueberries, strawberries, really low. So oversupply maybe. And then if we go to October, another profit downgrade because of drought conditions. And they also had to do a capital raising. So the price fell from $3.21 to $2.63. In fact, that drop to $2.63 could have been a good time to buy in hindsight, because as we go into 2020, it does look like the price is starting to level off. We've seen both a decrease in volatility, which is just a decrease in, high and low. You just see not much swings in prices there. And also that coincided with a decrease in volume. So not a lot of trading. People are either, bulls aren't winning, the bears aren't winning. And really in the last 2 months, we've seen even that volatility volume drop off until the 28th of August, when the half-year results were released. And we did see share price increase by 12% or so, because the outlook from the company is a little bit more bullish. So things are potentially turning around. So let's just go through their statement. So the income statement, we did see revenue up 7%, EBITDA SL up 13.7%, NPAT SL up 12%. So what is that SL? So it's actually two things they've added here or taken into effect is the AASB 16 leases effect, and also the SBIT is the fair movement in biological assets. So quite a few of these sort of companies have this S. So Treasury Wine, I know, have an EBITDA S and NPAT S, and Costa Group take into account also the ASB 16 leases. Earnings per share down to 10.82. You can see the bottom there. So down from $12.67 or $12.73 to $10.82. And that's because there was an increase in shares on issue from 320 million to 400 million due to the capital raising. So because of more shares on issue, even though NPAT's up, because of the more shares on issue, the actual earnings per share is down for the year. Go to the balance sheet. So cash increased by 283 million, so almost 50 million increase in cash. And that an increase in cash is met by the debt increasing by 50 million to 264 million. So net debt of 182 million. Equity is also increased by 40 million. So balance sheet's okay, nothing too bad there. And cash flow. So cash flow from operations up 30 million to 75 million. They did spending a little bit on capital expenditure. That's around 42 million. And as I mentioned before, the cash increase is due to borrowing. So you can see there, the net borrowings there is up about 50 million. So all up, nothing too bad here. Nothing that's going to make me sell or buy necessarily. But once we go to the presentation, they are a little bit more bullish. And you just see this just in the key messages here. So operations have now recovered from weather and drought, which were challenging at the end of last year. Strong performance in the international segment. So I'm not going to go into the international segments in this video, but it looks like China's growing. I think it grew by 130% or something. And things are just looking good here all around. Market conditions showing sizable improvement, driving increased earnings. So things are looking bullish. And there's one thing I really look for is bullish sentiment from managers. Previous sentiment from managers in the last year and a half has been quite negative from CGC. So things look like they might be turning around. And that's reflected in what happened yesterday. So right there, right at the right of the chart, a good candlestick, one-day chart there, one-day candlestick day, whatever you call it. So is this the turnaround? So I've been keeping an eye on CGC for a long time. It's one of about 80 stocks on my turnaround watch list. And I've just noticed, you can just see this moving averages. One thing I look for is a squeezing in the moving averages. Some people look at Bollinger Bands. I just look at the squeezing in the moving averages. This could turn either way. We could see a big uptrend or a downtrend continuing. So this could be the start of an uptrend. We've just seen increasing volumes, the highest volume since the COVID, where we did see some big down days and some up days. But high volume or increase in share price. This could be the start of the turnaround. And that's it for today's Neppy Invest the World. Now, just a disclaimer, I'm not a financial advisor. So if you do need to speak to a financial advisor or need to get financial advice, make sure you seek out a professional. I'm just doing this for entertainment purposes, just doing this to actually learn myself. And I'm finding that by doing these little presentations, I actually do learn a fair bit about a company. So I hope you get something out of this just as much as I get out of it. Until next time, have a good day, and I'll talk to you later.